everyone, this is Patrick from EasyFX Code Trading System, and it's Saturday, the 4th of June, 2022. And this is the weekly technical analysis for the Euro, the cable, and the Aussie dollar for the second week of June. And let's begin with the Euro, where it has been on a roller coaster, climbing up to slightly go past the resistance zone and then fell back into the support and then climb back up again into the same resistance zone. So a bit of a roller coaster as the US following the US dollar as well, because on Wednesday the US ISM manufacturing was better than expected. So this dragged the euro down and recovered on the Thursday. And then a slight pause on Friday's non-farm payroll report, which was also slightly better than expected with the jobs, but a bit mixed with the other indicators. So that has hit this resistance zone right at the daily 55 EMA, along with this previous swing low area. Yes, all the way back from 2 years ago. So let's extend this a bit further out, and it's still going to be a resistance zone here, major one above that at the 78.6 fib retracement of this swing move down, and also the 108 round figure. And next week, we have the ECB's turn to announce their rate and policy decisions. They are getting close to announcing a rate hike, which could happen in the next meeting in July. This time around, they need to announce their bond purchase, the end of their bond purchase. So we'll see whether that's going to be this month or the next, where they will then increase rates, start to increase rates as they try to catch up with the rest of the central banks around the world. Okay. So it's hard to see if they're going to, if the euro is going to break through higher from here, and it may be a limited move. So there could be a pullback and a consolidation first, and if it dips further lower, there is support at the 106 area. Otherwise, if it does climb up to hit the 108, then it's unlikely that it's going to be strong enough to break through higher. So this area seems to be strong resistance for now. Let's take a look at the weekly time frame. And yes, it's close as a spinning top here. All right, and these will still be the valid range for next week, potentially, from the 50 fib to the 78.6 fib retracement areas. And we'll compare that with the US dollar index to see if there's any major trigger. There's no major news on the US side except for the CPI on Friday. So we'll see if overall for the week, whether there's going to be any major shift. And let's also take a quick look at the month, since the month has just started. And yes, it's coming up to after recovery from last month. It's attempting to recover somewhat, and yeah, we'll see if it's able to climb back higher. Get close to the 100 fib area for this swing high. But the 110 is still going to be a major resistance, where it's unlikely to reach in the next in this current month. Okay. All right, so let's also switch over and take a look at the US dollar index, the DXY, to see how that corresponds to the euro in inverse correlation. So here's the US dollar index, the DXY, and indeed resistance has held. That's at the 162 fib extension here. So it did attempt to climb up higher on Wednesday with the better than expected ISM manufacturing numbers, and pull back all the way on Thursday before recovering back up to close at the 102 on Friday with the non-farm payroll report. Although the ISM services figures was slightly lower than expected, but the non-farm payroll report was jobs added was relatively better than expected, similar to the previous month. And support is still safe at the daily 55 EMA. So this zone at the 138 fib extension, along with the 55 EMA and this previous swing high area. Has now become support. All right, so this is a weekly time frame and a spinning top with a bearish, with a bullish close right into the 102 level. So it's still finding support and is able to creep up higher for this coming week. But it's unlikely to drive further up higher. Into the 104 area. So that's going to be a tall order for next week. All right, so looks like it's still in this consolidation zone from the 101.30 to the 102.45 area. and with only the CPI figure for next Friday, so no major impact coming up next week. Okay, so let's move back to the other pairs. Let's move on to the cable. And similar to the euro as well, it dipped down in the early part of the week and recovered on the Thursday. And the Friday for the cable was more bearish than the euro. So it's almost retraced the full move of Thursday back down into the support zone at the key 125 round figure, actually just below that. So for this week, the UK, there's no major news for the UK except that it is exposed to the US CPI figure on Friday. So it did run up almost to hit this previous swing high level, I guess, swing low. It's still holding as resistance now. And for the week, it's a bearish close there with dark cloud cover. So there could be further bearish momentum this coming week down into next fib area at the 21 fib. Just around the 124 round figure. Let's also take a look at the monthly time frame for the cable, and it's long-legged, almost a doji. So it's going to consolidate and likely to consolidate within these zones here. Let's go back to the weekly and the daily. So this is still going to be the key resistance area. And now this 124 is going to be support for next week. So let's move that over here. This is going to be an interim resistance. And perhaps you may move this slightly up into the 127 figure area. Okay. And above that, there's a very strong resistance area. Just above the daily 55 EMA. That's around the 127.50 zone. That's at the 55th retracement of this move down. Okay. So more consolidation for next week, and we'll see how this compares with the euro, which has the ECB announcements coming up. Let's move on to the Aussie dollar. And the RBA will be announcing their decision first for next week on Tuesday. And for last week, it did rally up and punch through the resistance zone at this swing low, the 100 pip, and push all the way through to the daily 200 EMA and into the 786 pip retracement before pulling back down on Friday with the US non-farm payroll figures back down into the 72 round figure. Okay, so this is still a valid support zone. This has now turned into support. And a major one up here above that at the 786 and the daily 200 EMA. That's the major resistance. All right, so May, in anticipation of next week's potential rate hike by the RBA, the Aussie has already started to move up higher. May pull back and consolidate first. We'll see if it's able to break through and target the next round figure at the 7200, or rather 7300, and whether this support level will hold along with the daily 55 EMA. It has broken through this week. Let's also take a look at the weekly time frame. And yes, it did attempt and before pulling back. So there is still opportunity for a bullish move, and with the RBA announcement as a trigger to push up into the 7300 area where the weekly 200 is also there. So that's a potential target. On the monthly time frame, and looks like it was similar to the others, a strong bullish recovery for last month, and early days for this month, but we'll see if it's able to continue its recovery. Okay, so we'll see if it's able to break out higher through the 78 pip retracement to hit the 73 round figure. And if it does dip lower, there should be support from 71 now, but this would be the wider range for now if it's going to consolidate. So all eyes on the RBA on Tuesday with expectation of a further rate hike, could be a higher quantum from 0.35 to 0.75%. So 0.4 basis points or 40 basis points increase. Let's see if yeah, I'll be able to do that compared to the previous month's increase of just 25 basis points. All right, so let's see whether the Aussie dollar is able to break through higher. It's at the key resistance now, or it did test the resistance level. Now it has to recover back higher. All right, so do check out my other videos on spot gold and dollar yen. Have a safe week and a good trading week, and cheers for now.